Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, and it's November 8th. Hope you guys are having a wonderful morning so far today. We got a couple important data to go over today, just two items here. The first one we get every week, which is the weekly jobless claims. So last week was revised 1,000 higher, so went from 214 to 215,000 people applying for unemployment. That was the report. So forecast for this week's report, which of course these are for last week's results, was for 210,000, and they came in pretty much in line with the previous week at 214,000 people applying for unemployment. Still at historical levels, even though it came in a little higher expectations, but that's not to fear because we're still at historical levels in terms of our jobs numbers here, and doesn't seem to be a trend we're seeing going upwards. Um, Last but not least, by 11:15 Pacific Standard Time in the morning, we'll get the Fed announcements on Wednesday, but due to the midterm elections on Tuesday, they pushed it one day later. So today we'll get the FOMC announcement. There's no press conference on this, so they're not expected to give it or raise any rates on this meeting, but they're looking for clues as to the pace of the rate hikes. They're expecting a rate hike in December, but they want to see if the Fed acknowledges that, and they want to kind of see what the pace for next year looks like. Also, they want to see if there's any comments on the economy or inflation. So these could be big market movers if there's anything out of the ordinary, if there are any concerns to be found in there. So again, this could be a market mover later in the day after the volatility could set in afterwards. So just be a little wary if you're out there in the markets. So let's go ahead and take a look at the headline news. Stock market, it's mixed. It was the Dow, everything was down earlier, and then as I've been kind of putting this presentation together, the Dow moved slightly into positive territory. We got about Q3 earnings reports still coming out a little bit. We had about 87% of them now kind of fully have provide their Q3 earnings, so we're almost complete with the amount of corporations giving Q3 earnings reports. There's been a lot of good reports coming out. The investors, but now with everything going on with the midterm elections and results and everything, that they wonder if they will continue that pace or if it's going to slow down. So those are thoughts are crossing investors' minds. So when you see the markets kind of alter, there's going to be some emotion base, and they're still kind of thinking through it, and it'll be kind of come as you go pace. And of course, the big one out there will be the trade with China if they come to a resolution with that as well. So let's kind of move it along here and see how the bonds are doing today. As you saw yesterday, we had a price correction. Late in the day, we were up like 30 basis points, so it was a great day for bonds, but the stock market just started heating up and the yields started rising, which you'll see on the next slide here, during the daytime. So we dropped down. We ended up closing down for the day, but we were up 8 basis points. So even though we closed in the positive from where we left off on Tuesday, the problem is we lost a lot of gains, like 22 basis points, and that led lenders to go in and price for worse pricing here. Had to reprice everything. So today we're up about 8 basis points from that point. So it's not quite enough to from the reprice yesterday to give us any improvement in that pricing. So we're kind of caught in this pretty large range here from the 25-day moving average to this floor of support, and again, there could be some pretty big fluctuations here. So be very cautious here. So far, we're kind of in this middle ground here. But later today, after the market closes, the bonds will go through their monthly rollover. So tomorrow, when you see the graph here, you'll see there's probably down about 15, 20 basis points. But it doesn't add to the, it's kind of a reset, more or less. The best way to explain it is more of a reset for bonds as they begin the new pricing for the next month. There is no change in pricing on our rate sheets. There's no price differences on there. It's just when they package these up on Wall Street, as you may know, bonds are over a 30-year period, so they every month. That's why we get the rate locks on like 30-day basis on those. So that way, when we close it, they sell them on Wall Street, they package them up, and they move them on. So again, right now there's no change in pricing from where we left off yesterday on that. Yields, as you see, we've been trying to test this, which used to be a ceiling earlier, like last week, and we broke above, and then now it's become more of a floor of support. Our next range is here in the 3/4, which is an important level here because if it breaks above this, it has a lot of room to put more pressure onto mortgage-backed securities and hence pushing rates further up. Because the next level up is like 3.63. That's like 40 basis points, almost a half a point in pricing that could really change, or half a point, or yeah, almost a half percent in yields, which could really push bond yields much further down. Now, the good thing is if you look at here, we're in this sold position according to the stochastic chart here, just kind of like the bond here. We're in this oversold position, the other way around, overbought position here. So the good thing is we try to keep in this neutral territory between the green and red lines here, and sometimes that helps us move back into that territory. Might push us back down and then help mortgage-backed securities out later on. All right, so that pretty much wraps things up. I hope you guys have a great rest of your day. If you guys want to get updated changes, like when the Fed gives their announcement, I'll post that up on Twitter. You can find me at Mike Bjork. You guys have a great rest of your day. Thanks so much for watching. We'll see you guys tomorrow. Bye-bye.